traders, Todd here. This is the free video update. This is going to be for Tuesday, June 30th. And the S&P, along with the broader stock averages, really took it in the chin today post-Greece. And, you know, what's interesting is the euro finished up on the day, and stocks still finished down 2.5%, depending on the index you looked at. Kind of wondering if the markets are looking for any reason to sell ahead of the summer, as well as possible Fed rate hikes. So let's take a look at the technicals and show you that this is a very key timing point. All right. So if we look at the high from the S&P back in February 2000, the top of the NASDAQ bubble, connect that to the high pre-credit crisis. That's 91 bars in the monthly, which is 91 months or 2,700 days, 390 weeks. You project that equal amount of distance out, and that gives you a top on this bar, which is May 2015. Not done yet. You take the low post-NASDAQ crash, connect that to the low post-credit crisis crash. That is 76 bars or 2,280 days. Project that out. Go to the 100% right here, and that is July 2015. So we have a couple key timing points. On top of that, we have the 1.618 relationship of the credit crisis decline back up at 2138. A lot of price and time here. Does that mean go out and sell everything? No, not yet. Not until we get a signal. All the way down to the 3-hour chart. I know there's a lot going on here in the chart, but here's what we're looking at. We're looking at a diagonal pattern, and we're talking red here. Red 1, 2, 3, and we're looking at this as the fourth wave, which is a pullback into this fib support between 2056 and 2019. We must hold here. If we hold in this zone, we should have one more move up to 2160 to 2180. At that point, I think we have bigger problems. However, if we break through 2019 here tomorrow and this week, I am prepared to take this series of wave counts here. I know there's a lot of voodoo here, but let me just tell you, if we break through 2019, I'm going to have to take all of these Fib and Elliott labels, put them right here at the top, and that's bad, okay? So if we don't hold 2019, a long-term wave 3 is going up there, and the minimum downside we're going to look at, if we have to take all of these labels and put them over the high in June, you're talking below 1950 and down into the 1800s in the S&P. So I don't like to try to call the top of a 7-year run in stocks, but the markets are really forcing us to do that. Okay, so I just moved out to the daily chart on the S&P, same chart. And here's that little wave 4 low we're looking at right around 2019. And let me just kind of underline that point. Let me get rid of it. If we break through, I'm going to have to take this higher degree third wave, put it at the top here, and that means we should have a 3-wave move back down into the fourth, which textbook says we go back and test the prior fourth, which was the October 2014 low at 1820. So we could have a 20% decline coming if we don't hold this support level in here. All right, we are short with our clients near term. We have a short technology position to hedge some long stock position. Prepare to get more short. Things are getting interesting, so just keep an eye out. All right, for tradinganalysis.com, I'm Todd.